Hey everyone, and welcome to today's show on Wealth Strategy Secrets. Today we're joined by Zack Haptonstall. Zack is the CEO and co-founder of Rise48 Equity, which has completed over $1.5 billion in transactions in just 3 years since it was founded in 2019. Rise48 Equity now has over 100 full-time employees in Phoenix. Zack's previous professional background includes healthcare sales and administration. He's the former president and co-owner of a hospice organization in Phoenix with over 110 employees and over 9 million in revenue. He's also a former live television news anchor and sports reporter for Arizona PBS and co-hosted a show on Fox Sports. Zack holds an MBA from Grand Canyon University and received his bachelor's in journalism from Arizona State. He's been a licensed real estate agent in Arizona since 2016, is an official member of the Forbes Real Estate Council, and is also best-selling co-author of Success Habits of Super Achievers. Zack, my friend, welcome to the show.
Yeah, no, thanks so much, Jay. Really appreciate it, man. I know we've known each other for a couple of years now, so thanks for having us on and making the time. Really appreciate it. Look forward to hopefully providing some value for the listeners here today.
Absolutely. I did not know that you were in the field of journalism and were actually an anchor. So I've got some good competition to really keep up with here.
Yeah, no, that's actually what I wanted to do initially, and I went into it, and then I realized, man, you can't really make much money in journalism, and it's a lot of crazy hours, crazy work. So I kind of pivoted out of it. But yeah, that is a little fun fact about my past.
Yeah, it's interesting how certain things and in your past really help kind of develop your future. And I try to tell that to, my kids right now. And, it's all about learning, right? It's all about the process. And, sometimes you discover what you like to do from what you don't like to do, and those
100%.
experiences shape you.
No, it's a great point, Dave. Yeah. And you can also, I mean, they shape you, like you said, and you develop skill sets that can be very valuable when you apply them to, other types of businesses or whatever it may be. And so, a lot of the skills that I developed by doing that and the confidence that I got from doing that, I can apply to multifamily. And so I think that, it was a great part of just my development as a person to do that.
Yeah, that's awesome. And I mean, why don't we jump in there,
Yeah.
Zack, and really talk about your background? I mean, for all the entrepreneurs, and we have a large audience of entrepreneurs, but completing over 1.5 billion in transactions in 3 years is just really inspiring. So, and I know you have a great story. So why don't we, kick off with your, a little bit of your background and how did that transpire for you?
Yeah, of course, Dave. Yeah. So real quick on me, I was born and raised here in Phoenix. So lived here my entire life, and I just grew up in like a lower middle class family. So no real estate connections, no rich uncle or anything like that. Didn't know anything about real estate. I wanted to be a football player. So I had a Division II scholarship to a small school playing football, realized I wasn't big enough or good enough to go to the NFL. So I was like, you know what? I really like sports. I want to be a sports reporter. Right. And that's when I got that journalism degree and was a live news anchor, sports reporter. And then, like I said, quickly just realized, this wasn't what I thought it was going to be. It's one thing to be a fan, but then when that's your job and you're working crazy hours, you really, can't make a lot of money. Then, you realize this is not what I want to do, long term. And so, at that point, Dave, I had a lot of school debt. My parents, could never afford to pay for school. So I was taking out loans myself. I was working full time nights and weekends while I was going to school, delivering medical equipment, just like an odd job I had got through a girlfriend at the time's dad who owned this company. And so, after I decided I don't want to do journalism, I needed to make money so I could try to pay off my debt. Just wanted to kind of get some financial foundation. So I went into healthcare marketing of all things, working for a hospice organization. All right. So I would wake up in the morning, drive all around Phoenix, walk in cold, the hospitals, doctors' offices, assisted living, build relationships with physicians, nurses, et cetera. And then when they had somebody who needed hospice services, they call me. I meet with the family, educate them, get them signed up, and Medicare pays for all this 100%. So, it sounds kind of weird, but it is a very lucrative and competitive private business industry. And it's all reimbursed by Medicare 100%. Phoenix is the #1 market in the country. And so, I was fortunate to do very well in that at a young age. And so, by the time I was, 22, 23, I'm making six figures, 150K a year. I bought my first house when I was 23. I got my MBA and paid for it cash, by the time I was 24. And so, I did that for about 4 years or so, and I was making 200K a year, paid off all my debt, and had good savings, owned a house, but I felt empty, right? It just wasn't satisfied. That was never my passion. I was just trying to find some type of, avenue to make money, pay off debt, and get stabilized foundationally. And so, through that process, I became marketer, director of marketing. Later, I would become president and co-owner of a hospice company. But in January 2018, I resigned and I sold my equity I had in that company because I was just very unhappy, unfulfilled. And I didn't know what I wanted to do, but I didn't have any time to even figure it out, right? Because I was just constantly on call all the time, 7 days a week. And so I knew I wanted to somehow create passive income through real estate. Okay. And because I wanted to gain control back of my time. And I knew nothing about real estate investing. I had gotten my real estate license in 2016, just as kind of a backup plan after the MBA, but I never used it. So I really didn't know anything about real estate investing. So I quit the job. And, at first I was looking at flipping homes. I quickly realized that's transactional. It's the same thing I just left. Then I learned about investing a little bit in mobile home parks. I tried to buy a mobile home park on a seller carry with my own cash. Because when I quit the job, Dave, I had relentlessly saved my money, for those 4 to 5 years, and then got a little bit of a pop from selling the equity in that company. So I had almost about 300K of cash, right? And so the plan was to live off of those savings and figure this out. Well, long story short, it took me over a year to even buy the first deal. Okay. And I was just blowing through savings the entire time. It was probably 3 to 4 months into that process in 2018. I discovered multifamily and syndication by listening to a podcast like yours. Right. And then that's when it kind of clicked for me, because I was looking at all these different things, mobile home parks, single family. And I'm like, I need to focus. I need to stay laser focused. And, going through that period, I faced a lot of like personal and mental adversity. And I'm not trying to say like I had like, I don't want to be dramatic. It wasn't like I was like addicted to drugs or depressed or anything like that. But when you wake up in the morning and you go from making a lot of money, getting fat paychecks every 2 weeks, to waking up, you say, what do I do today? And you're burning through cash and you don't have any tangible evidence to show yourself that you're even making progress. Nobody's there to tell you what to do or to hold you accountable. I kind of felt like hopeless, you know what I mean? Because I was trying to pursue this multifamily syndication, which just seems so big, so intimidating. Because again, I knew nobody in this, right? But I started going to conferences, started going to meetups. I started reaching out to brokers and cold calling brokers, lenders, property managers, setting up meetings. And so, long story short, 14 months after I quit the job. So now I quit in January 2018. Now it's February 2019. Finally closed on the first property. It was a 36 unit, $3.5 million deal. I put pretty much all the cash I had left into it. I found a few business partners that we just bootstrapped that thing. We did not syndicate it. We just put in big chunks of our money just to get that thing closed. And so since then, I mean, that really gave us a lot of experience, how to execute a value add plan, that first 36 unit deal in 2019. Since then, we've gained a lot of momentum to then go out and start syndicating deals and raising money from passive investors. So since then, we've acquired 35 properties, over 1.3 billion, 6,100 units, all here in the Phoenix market. We now have become vertically integrated with our own property management company. We have over 140 plus full-time employees on full benefits. And so it was a lot of adversity, in the beginning there on the front end. But, we were very blessed and fortunate to kind of catch the momentum and then keep growing and keep scaling from there. So that's kind of, how we got to this point.
Yeah, no, really awesome story, Zach. And I mean, do you think for you that what was driving you was it about time for you? Was it about control? Was it about building wealth, during those early years?
Yeah, it's a great question, Dave. So initially, I thought it was about time, honestly, because I felt like I was just in this rat race job that I had like golden handcuffs, right? It's like, well, if I quit, then I'm not going to make this money anywhere else, but I'm so unhappy. What's the point? And you just there's probably a ton of people. I would say the majority of people in America probably feel this way, where you just kind of feel hopeless. And it's like, you're looking forward to the weekend, then the weekend didn't meet your expectations, back to the job on Monday. So I was trying to look for I wanted to gain control of my time, but then I realized very quickly I was going crazy, Dave. I mean, because I had all this extra time, I wanted to be busy and stressed and have under pressure. I wanted to be grinding, and I almost missed my old job at that point. And it wasn't even just the money. I mean, the money is nice because it gives you a sense of security and comfort, and also, it's kind of like an indicator that you're one of the top in your industry, right? If you're making good money. And there's something and that was my self-concept. That was my identity, right? I was the
Mhm.
hospice guy. I was like, in all humility, probably the best in that industry. And then you go into a different industry where you're nothing. And I lost all my confidence, adversity, and you go through that. And so, I kind of evolved through that process where at first I was looking for control of my time. And then I almost started to develop a chip on my shoulder because so many people that I knew, including my own family, were like, what are you doing? Like, you just left 200K a year, and you go to like, family events or whatever it may be, and you meet people like, oh, what do you do? And you say, oh, I'm a real estate investor. And they say, oh, what do you own? And you say, well, nothing. It's embarrassing. And so I kind of get to the point where I got this chip on my shoulder where it's like, you know what? I don't even care anymore what people think. I'm going to do this no matter what. Like, I'm this, it's kind of like you dig a hole. I'm already this deep into it. I need to at least buy one deal just to prove to myself that I overcame the challenge and did it. And I can always go back to my old thing after that. So that's what it was. Wasn't really about building wealth. And through that process, I started to tell myself, I was like, you know what? To start a company, I started to realize it's so hard to start any company, even if it's small or big. And I said, if I'm going to do this, and this is why I really liked multifamily and syndication data. I was trying to discover what I wanted to do between mobile home parks, whatever it is in real estate. I started to tell myself, you know what, if I'm going to do this, I want it to have so much upside that it'll just be enormous, that I can just blow it up. And when I started to realize with multifamily syndication, there is no ceiling to how big you can be when you're raising capital from other people, you're benefiting them, and then you can grow an unlimited size portfolio. That's what really drove me. And so you just go through different stages of like mental, emotional, and like psychological, goals and sequences, so to speak, where, at first you just get the first deal. After you get the first deal, it's like, okay, well, let's get the next deal. Okay, let's start to scale. Now it's like build infrastructure. And I think the common thread is just the challenge, the competition, is really fun. Building wealth is obviously everybody's goal, right? We all want to have financial freedom. We want to have a lot of money. It's just human nature. But I realized when I was doing the healthcare marketing is that, I would try to get motivated by my bonuses, and I would try to like envision, okay, I'm going to do really well this month to make this much money. And I found, during that time, that that's very empty, and I could not get motivated by money. You just can't. And so the money has to be like a residual nice thing that is coming, and obviously you're going to take it and it's great, but it cannot be the sole focus because you will not stay passionate about it. I mean, right now, for me, it's really about like where we are now as a company. I think for us, it's about the competition and the challenge and being the best in our industry and kind of proving people wrong. Right. In the beginning, it's like people doubt you. You want to prove them wrong. And now it's like, well, you guys were in a strong market. You got lucky. Well, now we want to build operational infrastructure. We want to show that we're like a real company, so you go through different stages of it. But yeah, I think it's just the competition and kind of continuing to push your comfort zone.
Right, right. No, I find really the psychology of money fascinating, and I think a lot of times people don't really give enough thought to it because it really, I think it boils down, especially for entrepreneurs, into four freedoms. Right, you have freedom of money is one, but you also have freedom of time, you have freedom of location, and then you also have freedom of purpose. So, and initially when you're starting off your career, freedom of money is like the most important thing. You're trying to drive for that to have financial security, provide for your family, and it really overshadows other things. But as you start to get freedom of money, you realize how important freedom of purpose is, right? And doing
Yep.
the right thing. And that's how a lot of people really evolve, in their careers and everything. And, sounds like you were on a super fast track in terms of your trajectory.
Yeah, no, I agree 100%. I think that's a great point that you make, Dave, because yeah, it does represent freedom because you can do what you need to do. And when when you're deficient or you don't have enough money to do what you want to do, then you have to compromise, right, with different things. And nobody wants to feel that way. That's why, we love the United States of America because we have freedoms. And, the more, wealth you can build, for your family, the more freedoms you really do get, and be able to enjoy the things you want to do. And so, and for me too, it's like, I like to just set really big goals so that I don't get complacent. Like my goal is to become a billionaire by age 40, right? And a lot of people be like, wow, he's greedy, he wants money. Who wants to be a billionaire? And it's not to just have money and spend it on stupid stuff. It's just because it's such a big, lofty goal that I know all the work that will have to go into that. And for me, it's kind of like a benchmark. Like it's just like it shows that if you reach that stage, then you reach an elite status of your work ethic, and of overcoming different challenges. And it's a big, lofty goal, because you always hear stories about people who retire, then they become depressed, right? Or somebody hits a goal,
Exactly.
they achieve it, they become complacent, then they're not happy. And so, I've kind of just internally told myself years ago, even when I was going to school and when I was getting my master's degree, I was like, man, I'm working like 50, 60 hours a week, and then I'm doing this at night. Why am I doing this? And I started to realize, because I think myself and humans, we need to always have a sense of progress, right? We always want to feel like we're progressing. We don't always ever want to feel like we're stagnant. And that's different things for different people. You know what I mean? But we want to have hope for the future. We want to have hope that it's going to be better in the future. We're progressing and working towards something. And so I think, that's the power of setting goals, is that you're always kind of pursuing that and chasing that.
Yeah, 100%. That's exactly how we're wired, and always trying to drive for more. Super inspiring goal, Zach. I mean, if you were to, we talk a lot about wealth strategy, right, with our community, because, we believe it's not just, one particular investment, right? It's really setting up a comprehensive strategy to protect and multiply your wealth, right? So do you have, I mean, especially with that lofty of a goal, do you have a particular wealth strategy that you're focused on today?
It's a good question. Yeah. So, I'm kind of mixed on like diversification versus, I mean, I support different philosophies. So like, I think in the beginning, I'm a big fan of like, like Andrew Carnegie, the steel maven, right? And what his philosophy was, where he said, put all your eggs in one basket, and protect that basket and grow that basket. Because I think if you don't have enough resources initially, I personally don't think you should diversify, because you're never going to hit, like a big turning point, or hit that trajectory to go exponentially bigger. And so for me, where I'm at right now is, I have 100% of my net worth in our properties. I've never invested passively in any other deal. And my dad is like a financial advisor, director at Edward Jones. And he's been a financial advisor for like 20 plus years at Charles Schwab, Edward Jones. I used to have brokerage accounts and money in the stock market. And about 4 years ago, when I started doing this, I closed all of that, because I feel like I was enlightened by learning about real estate, and I don't believe in it. I just don't believe in it philosophically. And I'm not saying you can't make money or do well in the stock market, because you can. But I believe in what we're doing. And so right now I have all my money invested in this. And then I think, as you build more wealth, you obviously want to protect that, and you can diversify it, right? And put a percentage of it in a more conservative option. Then you can put a different percentage in something that might be more opportunistic or has more risk for a higher yield. And so that was one of the things I really liked about multifamily as well, Dave, is that I saw it as, I mean, what's the statistic? People say like 90% of all millionaires made their money through real estate or something like that. And so for me, I was like, okay, you look at like billionaires, like I'm not Elon Musk. I'm not going to go invent something, the chances of that ever happening is so rare, and I'm not nearly as intelligent as somebody like that to invent something. So what can I do that there's already a blueprint that I can just go work really hard, and with my focus and discipline and work ethic, I can just go do what other people have done, right? And that's what that's the beauty of real estate. And there's obviously different skill sets and advantages that you can use to gain an edge in this industry. And then once you start to build a lot of wealth, then you can start going into different companies. But you look at everybody who's been very successful, they typically had that one big company at first, that kind of took them to the next level, and then they can start putting money, but they typically always have their focus in that one business line. And so, I'm a big fan of, it's called a book. It's a book called How to Own Your Own Mind by Napoleon Hill. He's the same guy that wrote How to Think and Grow Rich. So everybody who likes How to Think and Grow Rich, I recommend How to Own Your Own Mind, because it basically just builds on that and goes more in depth. And he's interviewing Andrew Carnegie, and this was like written in the 1920s, 1930s. And his philosophy is that you need to stay laser focused on one thing and not distract your attention, right? And so if you can really just pound that one thing, you can become elite and reach exponential heights in that. Whereas a lot of people want to do multiple things initially, they never become truly elite in any one of them, right? So you kind of become, mid-level or average, so to speak, in several different things. And so, that's kind of my personal philosophy. I'm not saying that's right or wrong. Plenty of other people have made, a ton of money and have achieved a lot of success with different directions, but that's kind of, our philosophy. And we've maintained that for the company, where we've intentionally stayed focused on value add multifamily in the Phoenix market, right? Because we don't want to get distracted. We want to be hyper concentrated. We have a lot of equity demand. We could easily go to other markets and buy multifamily, but we have our infrastructure here and we feel like we can scale here. And I think that's been a big part of, our rapid growth, so to speak, is that we're rinse and repeating the same thing over and over and over, using the same materials, the same labor. I'm talking to the same brokers, and that's how we've been able to scale, because we're not, kind of spreading out in different markets. So
No,
that's
yeah, 100%, Zach. I mean, I think focus is really underrated, especially with growing a business as well as investing, because, we're all taught from Wall Street, they throw this word around, diversification, and all that really means is, you're hedging everything. You've got some bonds, you have some blue chips, right? And then you have higher growth stocks, and then we're mixing everything together in the pot. But at the end of the day, you can't really, beat the indices. It's maybe 7% over the long haul is really all that diversification means. So if you can have focus within a particular investment class and in a particular investment thesis, you're absolutely right. I mean, the results are going to be exponential. So tell us about a little bit more about, what you're doing with Rise today. Tell us about the market there in Phoenix, especially in this, market with the interest rates, current environment and things, for people who aren't familiar with the market.
Yeah, great question, Dave, and very relevant, obviously. So, as we record this, the last week of July here, 2022, what we've seen in Phoenix the last 3, maybe 4 months now is a significant slowdown in transaction activity and deal flow. And this is just a microcosm of what's happening across the country. This is happening everywhere in the United States for multifamily. So because the interest rates have gone up so significantly in such a short amount of time, from an underwriting perspective, when we're looking at these deals, values are down 10 to 20% from where they were, even in March of this year, February of March of 2022. And that's from an underwriting perspective. It's not even necessary that a lot of these deals are selling for 10 to 20% less. They're not even selling. So like basically, because debt is more expensive on the front end, buyers cannot get to the same prices they could get to earlier this year. And so they're making lower offers. Sellers' expectations have not adjusted. And so, as a whole, obviously there's exceptions, but, most sellers here in Phoenix are now just pulling their deals off of the market, and they're not selling because they don't want to give a discount, in the short term due to this volatility, right? And so we've seen significant slowdown in transaction activity. I mean, to give some context, we've had a deal in escrow to buy at all times for 24 consecutive months. The last time we didn't have a deal in escrow was July 2020. And right now we don't have a deal under escrow. So it feels kind of weird for us, honestly, because we've always just been on to the next one. I mean, in February, March of this year, we had 10 different deals under contract at one time, which sounds crazy to say. And we've now closed all of those and have not had anything else under contract. And so, as far as, to answer your question, Dave, as far as our strategy right now, Rise48, we're active buyers and active sellers in this market. So we've purchased 13 deals this year worth about 760 million. We've sold 6 deals this year since January of 2022, about 170 million. And so we're trying to be strategic on both sides of the transaction as a buyer and a seller. Okay. As a seller, we are not listing any new deals for sale. We just sold our last deal a couple of weeks ago. We're not listing any new deals for sale right now in the next 2 to 3 months. Kind of like I said, we don't want to give a discount to buyers in the short term due to volatility. There were a few deals we bought last summer in summer 2021. We were fully planning on listing those for sale here June, July, August of 2022, because we had cranked through the business plan, increased the value, we could hit our threshold. Well, now, because interest rates have gone up so quickly, buyer demand has slowed. The prices are down here in the short term. So we don't want to sell a deal early just to give a discount. So we're going to probably, wait until the fourth quarter to reassess, what it looks like when there's more buyer demand, so we can maximize our sales price, maximize returns for investors. And in the last 5 years plus, as you know, Dave, across the country, multifamily has been a seller's market. Sellers have had the advantage, right? Well, now in the last couple months, 2 to 3 months, it's completely shifted. It's now a buyer's market because a lot of buyers are on the sidelines. The debt is volatile. And so, we're not seeing hard money day one anymore. Every offer we were making the last several years, we were going non-refundable day one with earnest money. Well, now we have financing contingencies in there, 30 days where your money's refundable. You're not seeing a lot of that. And so as a buyer, we're actually very bullish on the Phoenix market and in a value add multifamily, because I know that when you look at the mainstream media, you look at the stock market has continued to decline in the last 3 months, and we're heading into a recession as a country economically. Well, the good thing is that fundamentally in Phoenix, nothing has changed. The population growth, the job growth, and rent growth continue to remain extremely strong. In the past few months, as the stock market continues to decline, we're having no issue renovating our units and leasing them up above our projected rents, right? So everything's going really well. And so that's kind of why we specifically have focused on affordable workforce housing, value add multifamily, because it's very insulated. It's where the majority of the demographic lives. When there's an economic downturn or recession, everybody loses their single family homes or they can't afford their luxury Class A apartments, they really all trickle down to this type of B class housing. And so, we're looking at our portfolio. It's kind of reminding us of COVID, Dave, where we froze the first few months of COVID during 2020. We're like, oh, what's going to happen? The world is ending. Then we look at our portfolio and we're like, wait a second, we're actually growing our rents. Everything's going really well. So, we're seeing strong performance right now, and we're actively making offers on deals, but we have to use very conservative debt assumptions, right? So we're having to assume much higher interest rates. From a financing perspective, to give you some context, when we started, the first 7 deals we bought were Freddie Mac agency loans. We were typically 70 to 75% loan to value. The last 2 years, the last 25 plus deals we bought have been debt fund bridge loans, right? And we've typically always been 65 to 70% loan to value for the bridge loans. Okay. So we've always been lower leverage. We don't like to take a lot of leverage. We want to be more conservative. Well, now for everything we're making offers on, we're in best and final on a couple deals. We have a couple off-market offers out right now. We should find out today and tomorrow. Everything we're making offers on right now is all back to Freddie Mac agency debt. Okay. And the reason for that is, we're hearing from all these different people that debt funds and banks are retrading terms. They're blowing up deals, backing out. People are losing their earnest money. Freddie Mac, if you get a debt quote, is as close to the sure thing that you're going to get, right? They're going to execute. Except the only difference is now, Dave, is that because interest rates have gone up so quickly in a short amount of time, and Freddie Mac has like a debt service coverage requirement, a DSCR of 1.25. These deals are debt service constrained. So we're underwriting deals right now at 45 to 55% loan to value. Okay, it's very low loan to value, and some of these deals do work, but we're offering lower prices than we were a few months ago. Cap rates have gone up in the short term for these offers we're making. So it'll be interesting to see how many deals in Phoenix and across the country actually trade and sell at these higher cap rates, or are most sellers going to just wait until first quarter if interest rates stabilize?
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com. Very interesting, Zach. And then how about in terms of what is the impact of that in terms of investor returns?
Yeah, good question. So, we're still trying to solve to the same returns. I mean, we're typically trying to solve to between a 1.9 to 2x multiple over 5 years to the LP and like 6 to 7% average cash flow. And so I think that's why, cap rates are going up, is because, at least for our underwriting, and obviously we don't represent the market, but we have been very active in Arizona. And I mean, we're the number one buyer of apartments in Arizona the last 12 months. And so we do see most of the deals from these top brokers, and a lot of them are saying the same things that we're seeing, is that, we don't know how investors are going to respond to be honest, to lowering the projected return. And so in the short, because this has all happened so quickly. And so, we would rather try to conservatively underwrite a deal and make an offer at a price where we can still hit the same projected return. It's just going to be a higher cap rate. We're taking lower leverage. And so we're still trying to solve to the same returns with the same conservative assumptions we were using before, even more conservative now, where we're reducing organic rent growth assumptions. We obviously, like I said, are taking much lower leverage, higher interest rates, but we're still trying to solve to the same returns. We have not yet launched a deal to investors, in this new climate, because we closed the deal a couple of weeks ago, but we had that deal under contract since like end of February, early March, and we had locked in our loan terms, in a couple months before we closed it, before things really shot up. So we have not yet launched a deal to investors. That's going to be interesting to see, Dave, is like, what's the demand going to be like? We launched that deal we just closed. We launched at the end of June. We actually launched it like the day I got to that conference where you and I met up in Charlotte. And I was nervous, honestly. I was like, this is probably gonna be the deal we lose our earnest money, because everybody's freaking out. The sky is falling. We've raised a lot of money. That was one of our biggest raises ever. And the exact opposite happened. We had the strongest demand ever. And we were just shocked. We blew the top off of it with so many people wanting to invest. And I think it's because a lot of, retail investors, they don't know where else to go. They don't trust the stock market. Crypto makes no sense. Even if you're not a very sophisticated real estate person, the mainstream narrative that inflation is bad to keep your money in the bank, people understand that, right? So it'll be interesting to see, how it goes going forward. Just yesterday, as there was a 75 BIP increase, the Fed. So we'll see what happens going forward.
Yeah, for sure. So if you had your crystal ball, and we're sitting here this time next year, how do you think things are going to play out in 2023?
Yeah, good question. So again, I don't have a crystal ball, but if we want to play a crystal ball, what we think will happen is that we think here in the fourth quarter of 2022 or first quarter 2023, you're going to start to see, indications that inflation is slowing. And once you get indications that inflation is slowing, a lot of these lenders are going to start decreasing their spreads. Okay. And so, for example, most of the loans that have been done for value add multifamily the last 2 years have been debt fund bridge loans across the country. These debt funds, for the most part, are publicly traded companies. They're REITs, mostly based out of New York City. They have to provide quarterly dividends to their investors, and they have thousands of investors. The only way for them to generate a yield and pay those dividends is to deploy capital. They have to lend money. And what's been happening the last several months is that a lot of the debt funds, they're just not deploying capital. There's too much volatility. And so what's happening with interest rates is, as the Fed has increased the Fed fund rate, that affects the SOFR index, which is what all of these lenders for multifamily are using, right? So your index is going up, and your interest rate is made up of two things. It's made up of your index. It's made up of the interest rate spread, or the profit margin that the lender is taking. Well, because there's been all this speculation about several increased hikes coming in the future, the lenders have to protect themselves against the unknown and the volatility. So they're baking in these increases at least 3 to 4 weeks before they're even announced, right? Which makes the spread go up, right? So they can protect themselves. So spread is going up, index is going up. You have a much higher all-in interest rate going in the wrong direction on both ends. Once there's some type of indication of stability, even if you say interest rates are going to be 6%, but they're not going to go up after that, or they're going to stay there or go down, well, then the lenders can stop increasing their spreads so much to protect themselves against potential future volatility. And they're going to want to start decreasing their spreads because they need to incentivize borrowers to borrow money so they can deploy capital. And so, we think that either fourth quarter or first quarter, you could see a huge surge of lenders cutting their spreads because they have to put capital out, kind of like what we saw in 2021, right? 2020, things froze. You had pent up demand, and then you had equity and debt just needed to kind of catch up. And so, we're hopeful that that's what will happen. A lot of people have talked about this like bullwhip effect type of phenomenon where, the Fed has kind of overcompensated by increasing it so quickly. And then they're obviously trying to cause a recession to get inflation down and increase unemployment. But a lot of people are saying fourth quarter, first quarter, they're going to have to slow down or decrease interest rates. If you look at Chatham Financial and some of these forward-looking interest rate curves, they're projecting interest rates to go down significantly next year. And so, I mean, it'll be interesting to kind of see what happens. So right now in the short term, we're not going to sell anything. We're looking for opportunistic opportunities as a buyer, where maybe we can buy something that's distressed, or somebody's willing to take a lower purchase price, and then really gearing up. Hopefully, first quarter, things will stabilize some more.
Great insight, Zach. Let's transition for a minute into, I know you co-authored the book into Success Habits of Super Achievers, and I'm a personal productivity junkie, as I know most of our listeners are. So tell us, what was your, biggest insight in terms of, writing that book, and, what were your takeaways from that you could share?
Yeah. So, I mean, to be 100% honest with you, I didn't really feel like a real author of that book. It was kind of like one of these things where there's a bunch of people that kind of, submit a chapter or a passage. But, I was basically kind of just sharing my story with it and things that I do to be successful. And I've tried a lot of different things. And I think you had a good point earlier, Dave, that, I think focus is so overlooked. I think in being successful, like if you can be one of the most focused, disciplined, and hardest working people and consistent over time, you can achieve massive success, even if you're not the smartest or the most talented. And so that's kind of what I've always kind of personally just, assumed like this underdog role, right? Where I don't think I'm the smartest or the most talented, but the things I can control are focus, discipline, and hard work. And I think that starts with your own personal habits, right? And so, for me, I think a lot of it, helped being like a college athlete, and you kind of get into that mindset where it's tough. I mean, you wake up at 5 a.m., you go, do sprints, work out, you have a very, robust schedule. And then I was always working full time while I was going to school, working part time while I had football and all that stuff. And so for me, I've tried some different things, and I think you have to do what's best for you. I did for like over a year, like the whole wake up at 4 a.m. thing. People have it's like the savers, right, from Miracle Morning Millionaire.
Right.
I did that, and that was very successful for me for a while, and I think that's a great approach. But then as we started getting busy with this business, I realized I'm having to stay up very late, just catching up on work. And now I wake up at like 6:30 to 7, right? And I don't work out in the morning anymore. I work out at night. But some of the things that I do is that I drink 2 gallons of water a day, which sounds crazy to people, but I'm always drinking a ton of water because it gives me a lot of energy. I've been doing that for years. Every weekend since 2015, I meal prep my breakfasts for the entire week. And so every morning I have like 4 eggs, 2 egg whites, 3 slices of turkey bacon, a piece of toast with almond butter. And then I just have like this cheap little espresso machine. It's like $40 at Walmart. I put MCT, coconut milk, and I have an espresso. And so like hydration and, having a good breakfast is always important to me. I work out 4 times a week, and always try to be very consistent. I really try to push myself like in personal workouts. And for me, it's more about mindset. It helps to like, I do a lot of stretching too. I do like deep stretching, helps to like, relieve toxins. It kind of just helps you to reflect. And so all these things are really for me, just keeping my mind sharp, because I know that like on the weekend, I work out a lot on the weekend. Like I'll work out for at least 4.5, 5 hours on Saturday, and then for a couple hours on Sunday. And it sucks, Dave. Like when I wake up, I'm like, I don't even want to do this, but I know if I don't do it, I'll like regret it or feel guilty. But as I'm going through it and it's tough, I'm kind of envisioning the challenges I'm going to have during the week, and the stress and the anxiety I'm going to face, and that those things prepare me for that. And so for me, it's about hydration, eating healthy. I really never drink hardly. And it's not like I am like have a drinking problem or anything. I don't like it because it makes me feel dehydrated. So I really don't ever drink. I don't do drugs or smoke weed or anything like a lot of people do, just because I always want to stay focused. And so for me, I'm always trying to stay disciplined, focused. And then I think when you have that in your personal life, it allows you to clear your mind and always be prepared for what you need to do professionally, right? I really don't watch TV. Like my wife, Grace, and I will watch like a movie on Friday night, and we like to watch UFC Saturday night, and that's it. So those are some of the different things that I do that have been successful. But it's what works best for you, right? And your own
Right.
schedule, and I've shifted that schedule, in the past, depending on what I need to do at that point in my life.
Right. Right. No, you're definitely speaking my language. And I think what's interesting, right, is that your brain is actually a muscle, right? And we need to focus on the brain more. Oftentimes people approach exercise, more just from a physical perspective, or they even go into stretching or yoga to say, I need to stretch because this hurts. But when you kind of take it the next layer and deeper, it's actually, it's all about mental performance. It's all about, reducing that stress and anxiety so you can be healthier, so you can be more present, for work, for your family and things like that. And I know that's what sports and, training has done for me, over the years, is to, really just give you that spark, that energy. And,
You're a former military veteran, Dave, so
yeah.
firsthand better than me about discipline and focus and grinding it out. So yeah, firsthand.
Yeah, no, absolutely. And it does shape you. And as I talk to, my kids and others, you're right. Creating those habits is, absolutely critical to your success, whatever you're going to do in life, but you want to be fulfilled. And there is a little bit of this whole yin and yang, right?
Yeah.
Where, you can't experience really high highs unless you've had some actually really low lows,
Yep.
and understanding that that's the life cycle, right, of human nature and how things play out. You start to become more comfortable with adversity,
Yep.
and working through that. So um,
Uh,
that's really awesome, Zach. Just one last question here. If you can share with the audience, if you only had one piece of advice to share with them about accelerating their wealth trajectory, what would it be?
Yeah. I think that, in regarding to accelerating your wealth trajectory, or even just pursuing your goal, my advice is, don't listen to anybody who tells you you can't do it, and don't take crap from anybody that's not there to support you, because, that was one of my big challenges when I started, was that, I already didn't have a lot of confidence and felt very insecure about being able to succeed in this. And then, there'd be certain people, some people I knew and some people were strangers that I just met for the first time. And when they would say negative things or discouraging things, it would crush me, like mentally and emotionally. And there were several times where I just like quit myself. Like I was just like, okay, I can't do this. And so you can't allow that stuff to get to you, because my whole philosophy is like, if you have a goal, then you are the only person who can put in the work and go through the adversity to achieve that goal. Nobody else can do that for you. And so why would you listen to somebody else if they tell you that you can't do it? Because they're not going to have to put in the work that you're going to put into to achieve it. So they literally have no idea what you're going to have to do to get there, and they really have no insight. And so, there's value in talking to people who've done what you've done. But even those people, if they tell you can't do it, they could be projecting their own insecurities, or they might feel threatened that your ambitions are bigger than theirs. Maybe you're older or younger than them. And there's reasons for that. So my whole thing is just like, when you really know you want to do something, you have to just stay laser focused on it and see it through, and don't let other people impact you. And I think it's very difficult to do, especially in an age of social media and text messaging. And we have all these different channels of mass communication coming at us. We're also aware and care what other people think. And you have to get to the point where you don't care what people think, because you're going to have, critics, and the results will speak for themselves after a while. So I think that's my biggest advice.
Yeah, that's great. It all really starts inside, doesn't it?
It does. Yeah. It's all
Yeah.
like we talked about, mindset for sure.
Yeah. Zach, I can't thank you enough for coming on the show today, spending your time with us. I know how much you have on your plate, but I think this is going to be just a fantastic story, lots of learning lessons for our listeners. And we hope to continue to track your success and, partner on some future opportunities.
Yeah. Yeah. Of course. Yeah. Thanks so much, Dave. Really appreciate the time. Thanks for having us on here today.
Sure. And Zach, so if people do want to reach out and connect with you, follow you, what is the best place to do so?
Yeah. Thanks, Dave. You can go to our website, rise48equity.com, RISE48 equity. And you can set up a call with me if you want to learn about what we're doing. You can email me, Zack, ZACH at Rise48 Equity. You can follow us on like LinkedIn and other social media, and look forward to chat with anybody who's interested.
Awesome. Thanks again, Zach.
Yeah. Thanks so much, Dave.